Another volatile day, and markets ended flat. The Dow fell 0.61%, the S&P 500 down 0.08%, and the Nasdaq barely positive at 0.08% as oil climbed on the Iran war. Today, we are covering February CPI inflation report. AI is increasing workload, and American consumers are getting squeezed with car loans. P.S. I post real-time updates on X daily, so if you want this analysis before your coworkers check the news, give me a follow at NA_man20. And if you want to read the full piece with charts and graphs for free, go to my Substack at naman.lohia@substack.com. Let's get started. February CPI, the last clean read. Before the oil storm, consumer prices rose 0.3% in February and held at 2.4% annually, while core CPI came in at 0.2% monthly and 2.5% annually. Shelter was the biggest driver and apparel jumped 1.3%. The next Fed cut is not expected until September. Conflict near $100 oil could push inflation above the Fed's 2% goal as the labor market weakens. We are increasingly likely headed towards stagflation, stagnant growth with high unemployment and rising inflation. The American consumer is getting priced out. The average new car price hit $49,353 in February, nearly 4 times the prior 3-year annual average. 1 in 5 car loans exceeds $1,000 per month, and terms have stretched to 69 months. In one instance of a company trying to combat the unaffordable nature of things, McDonald's is launching $3 menu items and $4 breakfast deals in April to win back lower-income households. Inflation is officially 2.4%, but between $50,000 cars and a Big Mac that hit $18, the lived experience is considerably more painful. AI is intensifying work, not reducing it. ActiveTrack analyzed 164,000 workers across 443 million hours and found that after adopting AI, email time more than doubled, business tool usage rose 94%, and deep work fell 9%. A UC Berkeley study confirmed workers logged more hours and took on broader tasks. Freed up capacity gets repurposed into more work, not worker relief. The shorter workweek narrative from Gates, Diamond, and Musk is being directly contradicted by the data. Meta bets big on in-house silicon chips. Like Google's TPU and Amazon's Trainium, Meta unveiled 4 chips under its MTIA program, with the MTIA 300 already live and 3 more rolling out every 6 months through 2027. Meta controls the architecture, giving it efficiency advantages off-the-shelf chips cannot match at 3 billion daily users. Meta is spending $115 to $135 billion in capital expenditure in 2026, nearly double last year, after massive deals with NVIDIA and AMD. The strategy: buy third-party chips now, build proprietary silicon for long-run savings. Oracle drops a monster quarter and bets the balance sheet on AI. Oracle reported, and investors were thrilled. Stock up 10%, reversing a 23% year-to-date decline. Total revenue hit $17.2 billion, up 22%. Cloud revenue surged 44% to $8.9 billion, now 52% of revenue, and cloud infrastructure grew 84%. Remaining performance obligations hit $553 billion, up 325%, and FY 2027 guidance raised to $90 billion above consensus. Oracle raised $30 billion in debt, is running $13 billion in negative free cash flow, and has $50 billion CapEx planned. But for now, investors can breathe a sigh of relief. Byte's tax refunds are up big. The average federal tax refund hit $3,742 as of late February, up 10.6%, with nearly 45% of filers claiming one of Trump's new deductions under the One Big Beautiful Bill Act. No tax on overtime led at 15.5 million returns, followed by enhanced deduction for seniors at 9.2 million and no tax on tips at 3.5 million. Iran is exporting more oil now than before the war started. Kpler found Iranian exports averaging 2.1 million barrels per day since the war began February 28th, above the 2 million before the conflict. Crude flows to China and India via sanctioned shadow fleet tankers, and Iran is profiting from the same disruption it caused. IEA makes the largest emergency oil release in its 50-year history. The IEA announced a record release of 400 million barrels in response to the Iran war and Hormuz shutdown. The world burns over 100 million barrels a day, so this covers about 4 days of demand, stretched over months. With 15 million barrels per day of Gulf supply disrupted, it may calm markets short-term but does not change the math of a large ongoing supply shock. U.S. deficit tops $1 trillion, and tariffs are now beating corporate taxes. The federal deficit through February hit $1.004 trillion, down 12% from 2025, but customs duties totaled $151 billion, up 294%, and for the first time, tariff revenue has exceeded corporate income tax receipts. The Supreme Court struck down many of Trump's tariffs under IEEPA, complicating the picture ahead. Thanks so much for tuning in today. For real-time updates, follow me on X at @_man20, and the full article with charts is completely free at nemenlohia.substack.com. See you tomorrow.